Julie Havlack.
Hi there, this is Julie.
Hey, Julie, you have a question?
Sure. Sorry, I got on the call a little late. I got hung up in another interview.
It's all right. Well, the treasurer's here. He's ready for questions.
Perfect. So I heard you guys were going to talk a little bit about the coronavirus's effect on the state pension plan.
Sure. Thank you, Julie. As many of you know, the state pension plan is one of the largest pools of public money in the entire world, and unrelated to the virus, many of you have reported on this. We stress tested the pension portfolio over the last few months by partnering with Pew Research. Obviously, we didn't stress test anticipating a virus. We stress tested anticipating different economic scenarios that could negatively affect the pension plan. So what I have to report this morning is part of which what we reported in the past. The North Carolina retirement system is one of the safest and most secure pension plans of its type in the United States. Secondly, as far as the actual plan itself, in the middle of February, the plan hit a value it's never before seen, which is about $107 billion. Since that peak, equities before yesterday, equities were down in general 11%, but our total plan was only down 3.2% from its peak from the middle of February. My reason for drawing that to your attention is just an indication, the fact that this plan continues to be one of the most conservatively managed plans in the United States. And the result of that is that when the stock market goes zooming higher, we don't perform as well as others do. And when the market goes down, as it obviously did over the last few weeks, we don't lose as much as other plans. So to give you those numbers again, before yesterday, equities in general were down 11%, but our total plan was only down 3.2%. And if you want to look at that on a year-to-date number, equities were down right at 9%, but our plan was only down 1.6%. And to put that in context, when you're dealing with something that's worth about $100 billion, each percentage point is worth a little over $1 billion. So that's where we are today, Julie, and I'll be glad to take a follow-up question if you like.
Do you have a follow-up?
Sure. Sorry, I was going to take myself off mute one first. Also, good to talk to you. Hope your day's been going well. It looks like I might be the only one on the call.
No, other people are on the call. We were just going down and confirming people.
Sounds good.
So.
All right, wonderful.
Thank you.
I do have actually one follow-up.
Yes.
In terms of what are you expecting to see going forward with the fluctuations in the stock market around the virus?
Well, what I expect to see going forward is a worldwide focus on this, not only as it impacts the health of people, but also as it disrupts supply chains across the globe. I think for many, we're seeing the first time of just how when you consume something in Raleigh, North Carolina, how many different places in the world it may have to go through to get here. We are seeing unprecedented lows in interest rates, and those lows in interest rates obviously help our fixed income portfolio, which has over $30 billion in it. And so as these interest rates have gone lower, the value of that bond portfolio has gone up.
Anything else?
All right, thank you.
John Joyce, Triad Business Journal. You have any questions, John?
Yeah, I just wanted to ask, I understand where we are now as of today, but as of today there haven't been any cases reported here in the state. Do you think that if something was to break here in the state, confirmed virus or even a death, would that do anything? Are we insulated against that? or would that impact the numbers?
Well, thank you for joining us, John. We hope there will never be any reported cases or deaths associated with this in North Carolina or anywhere else. But because of the diversity of this portfolio across the world, both in terms of private equity, in terms of alternative investments, in terms of opportunistic fixed income, in terms of real estate, and obviously equities, that a situation in North Carolina would not impact the value of the plan as much as whether this becomes more of a contagion worldwide.
You have a follow-up, John?
Yes, just, you kind of touched on it there at the end, but if we're pretty stable where we are right now, what is the most threatening or the scariest potential in your view currently?
What's the most threatening in terms of the preserving and strengthening the pension plan in general, or in respect to the virus?
Well, both, either from the stress test that you had done by the Pew Research Center or from the current virus, where are we most vulnerable?
I think we're most vulnerable if the worldwide supply chain, which has been built up pretty dramatically over the last 25 or 30 years, if there starts to be big disruptions in supply chain. And it's not just the product that you're buying in Raleigh, North Carolina, it's all the components of that product that you might be buying in Raleigh, North Carolina, that might be coming from 7 different parts of the world in order for them to be assembled so that you can buy it or consume it. So that's the number one thing from the contagion. Obviously, when you talk about China in general, when you demand or tell nearly 100 million people not to show up for work, that starts to set off a chain reaction. That is particularly of interest to us at the Treasurer's Office because of reports and Hazel at Pensions and Investment and their publication has been reporting on the stress that's been occurring in the banking system in China for the last probably 18 months to 2 years. So anytime that you have a disruption of business activity in a country that large, that was already facing some liquidity crises, it's just going to perpetuate those problems going forward. As far as the plan in general, John, we continue to face the challenge of high expectations for the pension plan. The assumed rate of return on the pension plan is 7%. Even though it's one of the lowest in the United States, the fact is the plan has not achieved that assumed rate of return on average for over 22 years. And a lot of people want to focus on the return on assets, but we have the responsibility to focus on risk. And it's never been more evident to me than yesterday when I was speaking to the Jacksonville, North Carolina, Onslow Chamber of Commerce, and the impact of funding. So when we are dealing with this pension plan, we not only have to deal with risk, which are some of the factors that we're talking about today. We obviously focus on return, but we also have to focus on our funders' ability to pay into the plan. We pay out over $6 billion of benefits every year. That's gross, but about $3 billion of that comes from the funding associated with the cities and the counties and the state itself. So the funding is obviously a big part of this. So anything that interrupts business activity or has a negative impact on the economy of North Carolina, the United States, or the world in general could ultimately have an impact on not just the value of stocks, but also on the revenues coming into whether it's the state or local governments that actually have to fund this plan every 30 days.
Anything else, John?
That's all for me, thank you.
Hazel,
You ready?
we're ready. What you got?
Okay. Well, on that note about the funders and the public policy impact of, if you have to come up with more or if it hurts their ability to keep paying. Are you thinking of any changes as far as downturn protection?
We're not, and thank you for your question, Hazel. We're focused on the fact that of who our customers are. So our first set of customers are nearly 900,000 public service workers across North Carolina. That's approximately 1 out of 10 adult North Carolinians who depend on this check. Now, some of them, like the people on this call, are interested in PE ratios, the Federal Reserve just cutting the discount rate, which happened a few moments ago, expected rates of return, actuarial assumptions. We have some of our participants who are very interested in those topics. But generally speaking, we're in the check delivering business. And we have now crossed a precipice over the last 2 years. For the first time in North Carolina, we have less people paying into this plan than are not paying into this plan. It's never occurred with this pension plan in the history of our state. So when you have that situation, you have to make sure that you identify with the customers, and the customers are expecting these checks every 30 days, and these are the hardworking folks who teach and who protect and who otherwise serve. The second...
I'm sorry, what do you mean by you cross the threshold? You have less paying now than who?
We have less people paying into this pension plan now than are not.
Less than not?
Well, there's 900,000 people in the pension plan.
Uh-huh.
And for example, I'm a state employee. So every month, 6% comes out of my paycheck, like it does for the city and the state and the county workers. And then the agency they work for contribute money toward the pension plan on behalf of the employee. At the state level, that bill we just sent is almost 15% of payroll. And at the local level, it's around 10% of payroll. What I'm saying is that there's the number of people paying into the system, which maybe it's simplified by saying active employees.
Okay.
The number of active employees is less than the number of people in the plan who aren't active employees. Because if you're
retired or what? Something.
No,
Okay.
well, actually, Hazel, there's two groups. There's retired and drawing, and retired and not drawing. There are billions of dollars worth of obligations in the pension plan of people who are retired, but because of their age or the amount of years they have with state government, are not yet drawing out of the pension plan. All I'm saying is that as I was in Jacksonville, North Carolina yesterday, and Onslow County, I heard from the Chief Financial Officer of Jacksonville, the Chief Financial Officer of Onslow County, the Community College President, the School Board Finance Officer. All of them have really hard questions about how difficult it is to continue and how these pension payments are becoming a bigger part of their budget. And then we had a whole separate discussion, which is probably not part of this call today, about how their health care costs that they're incurring at the community college, at the city, at the county, at the school system, how they're starting to dwarf every other part of their budget. And this should not be news to anyone on this call. Bill Gates said over 8 years ago, the single biggest threat to public education is, think about how all of you would finish that sentence. The single biggest threat to public education is how states and local governments account and fund for the health care and pension obligation of public service workers. What Bill Gates said nearly a decade ago is actually happening right now, not just in Onslow County, but in every county, in every city, and the state itself in North Carolina. But it's also happening in a more dramatic way across the country.
So overlay that with the market volatility and worldwide scares like coronavirus, what are you considering? Are you considering any changes?
Well, we're not, because we have one of the most we have one of the best funded plans in the world, and we have one of the most conservatively managed plans in the world, and it's been conservatively managed for almost a half a century. So nothing will change there. We continue to monitor what's going on in our fixed income portfolio, our real estate portfolio, our private equity portfolio, our opportunistic fixed income portfolio. But as you know, by following us for a period of years, and by others who have been on this call, there's tens and tens of billions of dollars worth of assets in this pension plan where we no longer own them, they own us. Because of the long tail associated with some of these investments, we're sort of at the whim of the general partner that was distributed to these folks years ago. And this is a very important matter, because as I'm starting, Hazel, and I haven't read about this in P&I, but I think it'd be a great story for you to look at. As we start to drill down and look at what our budgets and what our expectations were, for example, of the amount of money we were expecting to get back in 2019 from private equity, and that number didn't come through. But also the amount of money that was supposed to be drawn from us for new private equity investments that had already been committed to, those draws were less than expected. So there's a whole story going on, especially with pension plans having so many billions of dollars across the United States in alternative investments. There's a whole story going on here about when people thought they were going to be able to exit from this deal or this investment or this fund, and then they were going to use that cash flow from those funds to pay for new commitments. There's a whole story going on here about the dislocation going on there.
Follow up?
Sorry, what can you do about it in North Carolina as far as not getting what you thought and next what that limits you for next commitments?
Well, we can't do anything about it because these contracts were given out, and as you know, most of them have a runway of 10 to 15 years. So even though we may own 100% of a particular fund, we have no control because the majority of the decisions are made by a general partner who may only just own a small part of the fund, but controls all the votes that go on and all the actions that go on in those funds. Well, we can do.
Is that changing your thinking about private equity?
Sorry?
Is that changing your thinking about private equity going forward?
It changes our thinking. We don't change our thinking about anything. Our thinking is about what are we doing to be loyal and exercise a duty of care to our participants, and where can we go that brings value to the people in this plan and taxpayers like them. So that overall, nothing's changed there. What we have done, as you know, we made a tremendous commitment probably about 15 months ago, over $1 billion. I guess probably one of the single biggest commitments ever made at the Treasurer's office to a group that helps us, assist us in buying limited partnerships at discounts. And for example, some of these limited partnerships that we're buying are invested in private equity. So just because we don't go for the existing traditional 2 and 20, where people get paid 2% of what they manage for us and they get 20% of all the profit, just because we don't go after that in the traditional way doesn't mean that we're not looking at private equity through these other commitments that we made, similar to one we made 15 months ago.
Okay. And how will you judge the success of that?
Well, by the IRR.
Okay.
And obviously the cash flow. We've made some commitments over 15 or 18 months ago where the return on some of these investments we made, some of the dividends that we were expecting were paid before we had to make the next payment into the fund. And that's obviously a very good situation, but have the greatest degree of appreciation for the folks over in IMD who are managing this from the top to the bottom. And I'm very encouraged about their excitement and their due diligence, not just to look at new deals, but to look at old deals that were previously entered into to see what we can do to improve the economics of those.
Okay, thank you.
There were several people who joined us a little late. Just
Speak up a little bit. Dan.
wondering if any of you have a question? Any more questions? We'll open.
Yes, this is Aaron Sanchez calling from News and Observer.
Hey, Aaron.
How you doing?
Doing well.
Hey, great. Well, yeah, I'd like to go ahead and chat with the treasurer. Great. Well, I wanted to ask about pension cash as it relates to how the market's been affected by coronavirus. It's been fluctuating the past couple of days, and I wanted to ask you, treasurer, and also ask the investment staff through you, how much you estimate has been saved, in the state pension, from in the public equity market that has been brought down considerably, from what it was, just a few weeks ago.
I'll try to answer your question. Obviously, these are the numbers I have are as of 2 days ago. Aaron, in our equity portfolio, the current year to date is down 9%, but the plan itself is only down 1.6%. Every percentage point is about $1 billion, a little over $1 billion. But I want to emphasize, we do not manage this plan based on anticipation of viruses or volatility, the likes of which none of us have ever seen in our lifetime. We manage it based on risk factors, return factors, and also based on factors from the cities, counties, and the state itself in terms of its ability to fund the plan. So I would just kind of close by answering your question that this cash cushion that you referred to has kept this plan more solvent than ever before over the last week. But we don't gamble with those that's money who teach and protect and otherwise serve, and we don't have a crystal ball. And but this cash cushion has resulted in the plan not losing billions of dollars more than it would have. But this is a long-term plan that's based on long-term careers and long-term life expectancies. And that's how we continue to manage it.
Thank you, treasurer. Yeah, and I asked because from our conversations, I know well that out of as you said, because you don't have a crystal ball, and you're looking out for volatile markets, you're not going to, as you say, gamble with this money, and with this volatility that we've been seeing, that cash cushion, has come in handy to an extent, in a situation where we're close to, or at least there's fears of a market correction. And treasurer, following up, if I may, I wanted to ask. I mean, definitely the markets, are, if you already didn't think that they were volatile enough, they certainly are now. Moving forward in the future, when do you think the investment staff would invest again in public equities. You know, I mean, and especially given now that the markets, you know, are definitely not as good as they were just recently.
Well, that's, I can tell you while we're sitting here having this conversation that everybody in the investment management division are looking for new opportunities that bring value to the participants of these plans with a margin of safety that is commensurate with the way this plan's been run for the last 40 years. And I was down there a few moments ago, and I know that's happening in the real estate division. It's happening in the opportunistic fixed income world. It's happening in the equity world. And Aaron, just to give you a little sense of this, for example, and I want to connect it back to the virus if I can. And this number needs to be verified outside of the Treasurer's office, but I think it's fairly accurate. Everybody on this call knows, before this virus came to the forefront, that the United States was flaring off energy. We were burning energy into midair because we had nowhere to store it, because we were producing so much energy in this country. And everybody on this call knows that part of that has to do with, we were exporting for the first time in my life, exporting energy from this country. They don't want it, they don't need it, and they don't have a place to store it. So let's draw it all back to the United States. What does that create? That creates situations across the United States where we have energy companies who have tens of billions of dollars worth of debt and lines of credit and short-term loans that are coming due in the next 36 months. So energy, natural gas, for example, is at an all-time low. They thought they were going to be exporting a lot of these energy products that nobody wants because 100 million people have been told not to come to work. So the demand for energy is down, but this debt and these lines of credit have to be refinanced. It's creating tremendous havoc in the fixed income world, especially with below investment grade bonds, as the interest rates that these companies are having to pay to keep their companies going, those interest rates are going up dramatically, even when Treasury bonds are hitting an all-time low of 1%. And when that happens, we have a team of people here in the investment management division and portfolio managers who are waiting to accommodate and to pick up those opportunistic and be involved in those opportunistic situations as this stress continues to occur. So, you know, everybody talks about equities, but there are lots of other things that we make money on at the investment management division and in the Treasurer's office. And to give you one for example, and then I'll turn the phone back over. Year to date, our core fixed income portfolio is up nearly 5%. When the portfolio itself is down, and obviously equities are down. So that's why we are approaching this on a very conservative basis and looking at all assets across the board.
Mm-hmm. Thank you, Treasurer.
Thank you.
And just reiterating again for the record. And I mean, you're right about the other way that the investment staff, makes money through its diversified portfolios. And back to talking about pension cash and public equities, do you think that, and in relation to the coronavirus, do you think that the market volatility as a result for the virus is lowering the chances of investing cash in public equities in the future? Do you think those chances are slimmer now than they may have already been?
Well, I would say that as the price of something goes down, the potential value that owning that can bring to the participants of this plan actually goes up at some point. So I'm saying the exact opposite of what you're saying, Aaron.
Mhm. In fact, it would be more likely sometime in the future to invest some cash in public equities to benefit the participants of the plan.
Well, it depends on how everything else is doing. And obviously, this is not going to happen. And since we've met, I know that you've never experienced Treasury, mortgages at 8 or 9%. Obviously, if I'm not predicting this at all, but if this is all in relation to what we can earn on the money in other places. We have, as you know, $1 billion worth of timber that hasn't really earned any money in 14 years. I mean, the opportunity cost of that $1 billion is almost $2 billion because of that investment that the plan hasn't earned. So all this is done in conjunction with other things, but it all goes back not just to measure the word equity and not just to measure the word return, but also to measure risk and to measure risk to the people who actually fund this plan. And to be clear, because Julie asked a question earlier, there is no indication from me or this office or anybody that I've ever heard to increase the employee contributions into this pension plan. There's never been a discussion since I've been the treasurer about increasing the employee rate. So if you're not increasing the employee rate, then the returns, the cash flow has to come from either the employer or investment returns. Those are the only two that are left.
And you're fully you're fully confident that it's just going to be returns, taking care of that cash flow, of course, right?
Repeat the question.
Concerning employee contributions, you said there have been no conversation about increasing employee contributions. Returns will continue to meet those the liabilities of covering that, right?
Yeah. What I've said from the very beginning is that as long as I'm the state treasurer, I'm going to focus on preserving and strengthening, but sustaining this plan for the next generation of public service workers. That does not include an increase in employee contributions.
Thank you, Treasurer.
Thank you. Next.
Just want to give another opportunity. Anybody have any further questions for the treasurer? If not, we'll allow him some closing remarks.
Thank you all for joining us. I know you're going to have busy reporting days and nights. And I appreciate you making the choice to join us today. There's a lot going on with healthcare that we did not touch on today. To the far western tip of our state and the far eastern part of North Carolina, a lot of things are going to happen in elections today that could impact a lot that's going on in healthcare. What I do know is that in relation to healthcare, it doesn't matter how many people originally filed to be president of the United States. Every single one of them agrees that we have to have transparency in healthcare going forward. And I know that the executive order that President Trump has signed, that they are full steam ahead on implementing the rules regarding transparent healthcare. And my optimism around healthcare is really simple. We have enough medical needs, we have enough medical providers, and we're spending enough billions of dollars on this issue that we can get it right in North Carolina. And for North Carolina to be known as the state with transparent health care would bring a level of economic activity, and in my opinion, economic activity to depopulating parts of our state, otherwise known as rural North Carolina, the likes of which we have never seen. And that's why we continue to allocate a lot of our energy not only to cost overruns at the Department of Transportation, not only the volatility of the stock market, but also transparent health care. And lastly, as I close, I want to close this meeting in honor of Katherine Johnson. There are a lot of Katherine Johnsons in this world, but the one I'm referring to is the one who died a few weeks ago at the age of 101, who the movie Hidden Figures was told about. And I just wanted to say what I've said in public meetings during the month of February, that one thing that Katherine Johnson always said, she said many things, is that there's so much work that she did that she never got to put her name on it. There are hundreds, if not thousands, of split-second decisions that go on at the Treasurer's office every day with state and local government, with the pension plan, with the defined contribution plan, with the health plan. Hundreds, if not thousands, of decisions every day that people make on behalf of the citizens of this state and the participants in these plans that people never get to put their name on it. And just like Katherine Johnson didn't. But that's not why we're here. We're here as keepers of the public purse and to make sure that we don't spend a penny or buy a paperclip without first considering who this money belongs to. And final thing I will say is that keeping with the tradition of the Ask Me Anything call, and I'm still have not been shown anyone in the state or maybe even the country that does this on a monthly basis, that I've appreciated every call that we've had over the last 3 years and 3 months. We will continue those, but we are extending this now so that the media can call in for a listen-only line for our local government commission meetings. And local government commissions meeting this afternoon at 2:30. And there are issues regarding things that are going on across North Carolina that people on this call are very interested in, but they just don't have the time to drive 4 hours to come to the 3200 Atlantic Avenue. This is our way of bringing transparency and sunshine to a very important function of state government called the Local Government Commission. There are over 1,300 entities that come through the LGC in order to borrow money, cities, counties, the state itself, water and sewer districts. There's over 240 of those entities that are on a unit assistance list or some kind of watch list. So there's a lot of things going on across North Carolina with things that you can see and things that you can't see, those being things underground that are very important. And we've had great success by putting this audio availability out to the press across North Carolina, because when you look at the LGC agenda today, there's probably 42 items, and each one of them represents a city or a county or a water and sewer district of some type. And for us to avail the agenda and the conversations that go on the LGC meeting to the media of North Carolina is something that we're very proud of, and I want to thank staff, many of whom are sitting in this room, for making that possible.